Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I'm Rajeshwari here. Let us discuss today preparation of trial balance when the balances are given. In the previous class, we have understood the meaning of trial balance and how we are preparing the trial balance. So, to prepare trial balance, we have two modes, right? The first one is by preparing the ledger accounts. We'll take the balances from the ledger accounts, then we will prepare the trial balance. So ledger account, how we are recording the balances? Dealer, don't forget dealer, DEALER, dealer. So whatever the first three, that is drawings, dividends, expenses, assets, these accounts balances we will record debit side, and liability, equity or capital, revenue, these accounts balances we will record under credit side. And we won't do balancing for, see, mainly we will prepare ledger accounts for the all three types of account, right? The types of accounts are personal, real, nominal. Nominal account. Only we will do balancing for personal account and real account. We are doing the balances, and the debit balances we are recording in trial balance. For nominal account, whichever side is higher side we were considering for the trial balance. We won't do balancing for the nominal account. So now today we are not going to prepare any ledger accounts. Already directly they have given balance March 31st, 2023 based on the following balances. We need to prepare the trial balance. Now we know we need to record drawings, dividends, expenses, assets, debit side, and liability, then equity or capital, and revenue we are recording under credit side. So now we will see capital, equity or capital, which side we are recording? Credit side. Drawings is a expense, so we will record debit side. Machinery, assets, debit side. Sales is a revenue account, nominal account, right? So this we will record credit side. Purchases, debit side we are recording. Then sales return. See, sales means the goods is going out, so we will generate revenue. Sales return means whatever we sold because of defect, damage or overstock, they are returning. So it is like a purchase only, so it is coming back. So that's why we will debit. The stock is going to increase, so you had a 10 stock. Out of 10, 8 you sold. So how much is remaining? 2 only remaining. But out of 8, they have returned 2. Now 4, right? So it is adding back to the stock. So that's why the sales return we are debiting. Okay. Purchase return we are crediting. It is whatever we have purchased, we are giving it back. Wages is an expense. Nominal account we are debiting. Goodwill is a, which side we are recording? Debit side, right? Debit side. Why? Goodwill is a reputation of the company, and it is an intangible asset. Interest received is an income, so it is a nominal account. Nominal account we will record in, because it is received, we will record credit side. Discount allowed is an expense, we are recording debit side. Bank overdraft, I have withdrawn over amount. When I've returned this with interest, expense. As of now, it is a liability for us. So we are crediting. Bank loan, we are crediting. Debtors, we have two debtors, Natu and Rupa. So both we are debiting, right? And creditors, suppliers. Debtors means customers, creditors means suppliers, we are crediting. Okay. Cash, debiting, asset. Closing stock we are debiting. Okay, most of the time we won't show closing stock. This is opening stock. Closing stock in the trial balance, because that we will show it under the trading account, and all the 99% time we will show it in trading account only. If in case 1% chances are there to show it in the trial balance, if we show it in trial balance, we will pass an entry, purchase adjusted entry. That is closing stock account debtor to adjusted purchase account. Adjusted purchase account. The 1% chance is there to show the closing stock, otherwise we will show it under the credit side of the trading account. Okay, now we will prepare the trial balance account. So first, capital. Which side? Capital. We are recording credit side 1 lakh. Then drawings. Drawings expenses we are recording debit side 16,000. Machinery 20,000. Assets we are recording debit side. Sales revenue we are recording credit side 2 lakh. Then purchases. Purchases we are recording debit side 2 lakh 10,000. Sales return. Sales return. Sales return is 20,000. Debit side we are recording. Purchase return. Credit side we are recording. 30,000. Wages expense 40,000. Debit side we are recording. Goodwill 60,000. We are recording debit side. Interest received credit side, it's an income. Discount allowed, we allowed a discount, so it is an expense for us. Discount allowed 6,000. Bank overdraft credit. Bank loan credit side 90,000. Debtors, we have 2 debtors, so total we will write together 55 plus 20 75,000. Total debtors, total creditors is 60,000. Cash 54,000. Debit side. Opening stock debit side 16,000. Now we will total both the sides. First we will take total of debit side 16,000 plus 20,000 2,10,000 20,000 40,000 60,000 6,000 75,000 54 16 plus 16,000 5 lakh 17,000. We'll check our credit side also. 1 lakh 2 lakh 30 15 22 90, then 60,000. 1 lakh Like 30,000, 15,000, 22,000, 90, 60. Right? 5,17,000. Both the sides totals are tallied. So balancing is correct. Understood now? Here we have recorded all the assets. That is DEA. Dividend, drawings, expenses, assets. We recorded debit side, liability, equity or capital, revenue. We are recording under credit side. Okay. So this is balancing. With the help of balances, we are preparing the trial balance. Okay. Thank you for watching. Have a great day. If you are not yet subscribed, kindly subscribe the channel. Press bell icon to receive updates.